movie thing where you go?
Yeah, I do. We've got our little morning thing. Good morning, everyone. Welcome to Morning Minutes with myself, Michael Burgio, Mark Novak, and special guest Mark Conway to tell us all the secrets and all the things that banks don't want you to know about financing at this time. So welcome, Mark and Mark.
Thank you.
So I've got Novak and Conway to make it easy for myself.
Mark Michael, Triple M.
Triple M. Let's get started. So what month are we? October 2020. How easy is it to get money at the moment? And then let's get into some particulars.
So it's hard to get money at the moment. However, the benchmark rate for servicing is coming down with some banks, which means that your income can service a higher debt. That's quite good. Borrowing money at close to 2%. If they add the buffer at 2.5%, they're running servicing on a much lower, close to 5% than 5.5% that they were looking at not long ago.
So just to take that back a bit, so people understand. So because people always have the fear, well, what happens if the interest rates go up? Will I be able to afford it? Just explain that buffer, that what you said there, that you're borrowing at 2.5%, but they service 5%.
So banks add a 2.5% buffer to the interest rate. And if that's lower than the floor rate, they will use that for loan servicing. And if it's higher than the floor rate, they'll use the floor rate. Basically, what that means is they're adding 2.5% to your interest rate to make sure you can afford it. And then at 0.25% of a RBA interest rate cut, that's quite a few interest rate rises while they can make sure that you can still afford those loans. Okay. So they're putting a buffer between the rate that you're paying and the rate that you're servicing on to make sure that you can afford the loan that you've applied for.
Beautiful.
Who's this Freiberg guy? What does he do?
He's the treasurer. So Josh Freiberg's the treasurer.
And he made an announcement. He made an announcement saying that he's gonna make it easier.
So he wants to free up credit to stimulate the economy. So what they've proposed, ASIC and APRA don't both regulate the banks, that ASIC takes a step back and APRA just to regulate the banks, and they change it from the onus on the bank to more on the onus on the borrower, which means if you sign up to a credit contract and you've signed all the bits and pieces, you've provided all the income details, there's less pressure on the bank and more pressure on you, which in theory should free up credit and make a little bit of a loosening on the criteria that's needed, and change it to more of a borrower pays kind of a perspective.
That should really help, like your self-employed, your business owner, because I know in the past that it's been very difficult for them to get loans with proof of income and if they've got cash, and there's so many loopholes. Do you see that helping them, or will it still be just as tough?
I think it'll still be just as tough because the banks are still going to run rigorous servicing, and they're going to look at your profit. They're going to look at the add backs, and they're still going to make sure you can service the loan, irrespective of who the onus is on. It's still going to have to run through servicing. The banks have been regulated even tighter for the last 10 years. It's unlikely that they're going to relax just because one person in government says that it'll be a good idea.
Okay. But if this noose has been tightening for 10 years, I think since 2009, since 2010, it's been getting harder and harder and harder. Is it really going to loosen up like that?
I don't think it will, because it's a step back on all of the regulation and says, look, don't worry about the things that we've had to do in the past. You know, we only needed that for X amount of years. Why? We're just going to revert back to our old habits of just letting a loan go through because it looked good on paper to start with, and they didn't do any of the additional testing. The expenses sections aren't going to be wound back. They're going to be kept in place because it's responsible, and they're going to make sure that the banks are always lending responsibly to make sure that their balance sheets look good. They're still going to be accountable at the end of the day, irrespective if the Treasurer of Australia says that credit should be more free-flowing and available.
And what sort of your time limit to get an application approved at the moment? If we run the scenario.
What a dirty question you've just asked.
Dirty question. There's a massive gulf in service levels between banks at the moment.
Yep.
Some banks are absolutely disgusting on how long it takes them to pick up an application.
Yeah.
What does disgusting look like?
Disgusting can be weeks and months.
Wow.
We won't name and shame too much at the moment, but we need to be very careful on when you approach a bank that you know what the service level is like. It could be the difference between missing out on a property, pulling your hair out because it took 3 months to get to the approval stage. There's a huge
3 months.
3 months. It could be a disparity between the bank, enough to make you just change applications later on for no good reason whatsoever. So
Mark,
it's a really
if it took my
important
loan 3 months to get approved, I'd be disgusted, Mark.
You would be disgusted, yes.
So that shows a big emphasis on the borrower getting in contact, one, with a broker, not a bank, because if you walk in the door of the bank, that's going to take 3 months, you're pretty screwed because they're not going to tell you. And then two, depending on what your deal looks like, they may be the only bank you can get the loan with. So you really need to have that lead time before you find a property, eh?
That's right, because you can't bid on a property without an approval. And if it took 2 or 3 months to get an approval, you would never get a property. So, and we're actually coming into the end of year at the moment. And from November onwards, traditionally, the service time doubles. So if it took a week, it's going to take 2 weeks. So we're in October at the moment. We've got a couple of weeks left before the banks start to send out their settlement times for Christmas.
Yep.
Making sure that everyone can meet a Christmas or pre-Christmas settlement. And then we've got to negotiate that with our vendors, making sure that we can meet cooling off periods and things like that. So there's a lot of an interesting period coming up, traditionally starting from the first week of November onwards.
For someone watching out there who's thinking about buying, can you give like a quick 10-second recap on what a good applicant looks like, as in what paperwork they have ready for you compared to a shit one, just so in their head they can go, okay, I'm going to call a broker today. This is what I need to have ready. What should they really have ready? Just a quick little good.
On a high level, you need 2 things to buy property: cash for your deposit and income for debt servicing. But your liabilities and outgoings are also more important now than ever. So I need to look at the bank statements, get all of your current loan statements up until the date that you apply to make sure that everything is current as possible. So you might need to massage your credit card limit.
Credit card bill. So your phone bill, credit card, any car loan, all of those.
All your car loans. If the statement comes out every 6 months, you've got to get it from the bank as quickly as you can. You want to put together an ironclad application and make sure that it passes really well. So when you send it to a bank, it gets approved in a couple of days. If an application is extremely strong, it'll get approved in 48 hours.
Wow. Okay.
I sent an application to a bank on Thursday, and at 3:30 on Friday, it was unconditionally approved.
Wow.
Yeah, it wasn't a big loan.
What does strong mean? Look like?
Strong means good income, plenty of what's called a post surplus on a monthly basis. That means that after your loan repayments, inside the service and calculator, there's $500 a month of extra money. That means that the loan comfortably passes loan servicing. So these things you don't know until you apply for the loan, but it's really important to nut these things out first and become really organised.
Yeah. So it may actually be a good recommendation that if someone may be able to stretch borrowing for $1 million, but it may take 2 to 3 months to get the loan because they're stretching it, where they could get a loan quite comfortably for $600,000 and get it within 48 hours, sort of thing, especially if it's an investment property.
Well, for an investment property, that's a good idea. But if it's a home, that means you might be buying a home that's less than what you want.
100%.
But for an investment property, that might be a good idea. Quickly pick up that 1 better or that 2 better rather than stretching for the 3 better.
Yep.
Hey, Mark, why are people so reluctant to talk to you in the first place? I keep telling prospective buyers that talking to a broker is for free. You only pay if they're successful. But why is it so hard for them? Like, they don't mind coming to walk through a property without getting an approval, but they're reluctant to come and talk to you.
There's something about bank loyalty. If you've been walking into CBA since you were 15 years old, there's some people seem to have a strange loyalty to their local bank. There's a move away from that now with digital banks, but there is a lot of people that go, no, the family guy does the finance, or the local bank does the finance, or I walked into Aussie Home Loans and the guy behind the desk was very helpful and I'm just going to go in there.
But these guys don't even want to go for a loan though. Like, they don't even want to ask for a loan and is it, because often I think that sometimes the devil's in people's heads a little bit. Like, I don't know.
I think they're scared. I think they're potentially scared of hearing what they don't want to hear. I get what you're saying. So it's not, we're coming from, they're more of they want to buy that. They don't know any broker. They don't know any bank, but they rather see 30 properties with us and divulge everything to an agent, when we're like, no, you got to speak to a broker. He'll tell you. But they're very timid. I think maybe the fear of rejection, or I don't know, maybe they think they're wasting.
I think it's the fear of the unknown. If you've never been through the process, you don't know what's involved.
Yep.
And being organised is the smartest thing you can do. So if you're considering doing something, get organised. Approvals last 3 months. They can be extended easily, but get all your ducks in an order, especially in the strangest economy the planet's ever seen.
And they don't need to come see you physically, do they? You could do most things over the phone, quick call.
On the phone or an email is even easier.
Yeah.
So we discuss what you want. We run the calculations. Send me all your information. I'll come back to you with a couple of different options. Talk to you about property. Talk to you about buying power, borrowing power. What does the cost look like on X amount of different options? And then you can go away and make an educated decision.
And that's free, or does that cost something for someone to get that information?
That's free. For you, I'll charge, but most people.
Oh my God, it's for free.
Yeah.
That's amazing.
Yeah.
Now, just a first home buyer. Often, the first home buyer being self-motivated is less likely. A first home buyer with their foot up from mum and dad up their bum is pretty common. What does the first home buyer need to buy a house for $500,000? Because at the moment, the government's saying you don't have to pay any stamp duty. So at the moment, they're saving $25,000 on stamp duty. At the moment, they only need a 5% deposit. So they only need a $25,000 deposit. But if a first home buyer has the deposit of $25,000, they can use 5% because of our lovely government incentives. They can use the stamp duty because of our lovely government incentives. What income do they need? What sort of job do they need? Or what's going to be a yes from the bank and what's going to be a no from the bank?
That's right. So there's a misconception out there that someone on $50,000 can go and buy property. And you can borrow around 6 times income as a maximum or as a benchmark to work on. So if you're on $50,000 a year and you go for a $300,000 loan, it might just go through. If you want to buy, you can't buy anything in our area or in the Sydney area for that kind of money. So if you do want to buy for $500,000 and you want to borrow $450,000 plus, you're looking for $80,000-$90,000 a year in income to make sure you can cover the debt.
Very good tip.
You've got to go in with zero credit card.
That's the biggest tip I've heard in lending ever.
That's a great tip.
That's right. So there's got to be a minimum income level on a base income that they can look at. So if you're on 80,000 a year, 6 8s are 48. That would service a loan that would buy you a property for $500,000.
Yep.
Okay.
And you would pass comfortably. You would be able to shop at almost any bank. You would be entitled to fixed rates at close to 2%.
Wow.
The products would open to you would be vast.
Now, how about if mum and dad will help? So they've got even less of a deposit, or let's say the first home buyer thing's gone and mum and dad, or they want to buy a house. For getting the grants and all that, just a first home buyer, mum and dad have a house with $1 million equity. How can mum and dad help?
So as a guarantor loan or a family pledge, which is what you're referring to,
Yep.
The borrower still needs to service the debt. So the loan is still going to be $400 and something thousand. You still need income to do that. If mum and dad want to put in cash to balance up the rest, that works a little bit differently. But if they're putting in equity, we still need to service the equity. So when we do these kinds of family loans, we still need to do a lot of legwork to start with, just to see does it all stack up from a perspective of the lending side of it. Equity is great, but you still need income to cover the loan.
Yeah, that times 6 is a big one, regardless of how.
So let's say little Johnny wants to buy a little unit, and little Johnny wants to buy a unit for 600,000. Little Johnny has to borrow technically 570,000. Little Johnny, to service that loan, needs to have I don't quite understand what you mean by times 6 of the income. So if little Johnny is earning 60, times that by 6, and that's 360 he's likely to lend.
Yeah.
And then if little Johnny is earning 80, times that by 6, he can borrow 420. So little Johnny's going to find it hard to buy something for 600,000 unless he's got a killer wage.
Well, that's right. So it means you've got to be on the middle to the higher bracket to start to borrow a little bit more money. Now, there's going to be an adjustment to the tax brackets at the moment, which will help a little bit, but it will only help maybe by 5%. So
got it.
Yeah.
So the only other way around that is for mum and dad to take on a loan to top up the balance for little Johnny and give the money to little Johnny. So if little Johnny's in 60 and take it to 360, mum and dad can borrow 200 for little Johnny, and little Johnny can buy something for 560.
That's right. And we need to workshop that well in advance because that's gifted funds. And we need to make sure that that's in the account for 3 months if we can. We need to look at banks that might not look at genuine savings. There's a couple of different options that we need to consider on that. So if someone's got low income, we need a really good deposit.
Okay. Now, talking about COVID, there was some incentives to help banks did for COVID. Is that still going? Will that be extended? What's happening with COVID at the moment?
So the mortgage freezing or the mortgage holidays or whatever the term you want to use is coming up soon. Yes, they're being extended. You've got to make an application to the bank on why you need it extended. It's going to run out soon. That's only for people with existing debt. Once that debt's finished, with a little bit of luck, you haven't paid your repayments in a while, so you should have saved up a little bit of money, and then it's time to start those repayments again with the interest capitalised into the loan as well. It wasn't free money.
No.
So that's something to discuss with people that have an existing loan and they're not sure about the parameters. First step is to go to your bank. If you don't understand it, talk to someone else.
Yep. What about any banks? Mark.
I'm just thinking about little Johnny again. If little Johnny gets married, he's lending doubles.
If she works.
Yeah, that's true.
If little Johnny's girly earns the same amount of money as him, so if she's earning 60 and he's earning 60, times that by 6, they can borrow almost 700 grand. Is this true?
This is technically true. However, they've got 2 lots of expenses now to add into the family mix. So maybe that comes down to 5.5. We don't know. Maybe little Johnny's wife is a big spender. We need to workshop that a little bit as well. Little Johnny's wife happens to have some credit cards that Johnny didn't know about.
That happens.
That happens all the time.
Yeah.
So talk us through a good deposit. With mortgage insurance, so just people can get a range. Let's say their wage is no issue. They're earning 200 grand a year. So what's the minimum amount of cash they'll get a loan for? Like 5%, but they pay mortgage insurance, or is it minimum 20% of purchase price? Let's say wage is no issue. Just talk us through that for people out there.
The wage is no issue, which means you can service the loan you want. 20% deposit avoids mortgage insurance, and anything less, we go to the banks and we ask for the loan to be insured. All banks have a different amount of mortgage insurance. And sometimes putting in less cash and paying a bit of mortgage insurance over 30 years is a smart decision. You might need to keep 20 grand back to fix up the property. You might not have that extra money in the first place, but you've got good income. So there's a couple of parameters to discuss there. Everyone has a different situation.
Yep. Commercial property, borrowing commercial.
Completely different ballgame. Oh.
So deposit-wise, minimum, 60% deposit, 30, let's say good.
Other way around. 40% deposit, 35% deposit. The 20% deposit is a bare minimum with only a couple of different options. Commercial is a whole different ballgame. Generally looking at the company that's buying it. Is there a lease in place? What's the premises do? The financials behind the purchase. There's a lot more to discuss on that.
How does a bank look at it if it's vacant? So they're going to have to look at your whole personal expenses and basically say, well, if the shop's empty and it's going to cost $500 a week, can you afford maybe $700 a week extra on top of all your personal stuff? So you would need really big income.
That's right. And you're paying all the outgoings because you're going to be the tenant in that case. So there's a little bit to add into it there. Commercial is a bit different. Let's workshop that.
Yeah, commercial rates at the moment?
Mid-3s and upwards.
Yep.
Still quite attractive. 4.5% to 5% with a lot of different banks. You can shop around a little bit. I've seen some in the low 3s once or twice lately, but the average is 4.5, somewhere around there.
Hey, Mark, what's your favourite loan to write?
That's a good question. My favourite loan to write is generally someone who might work in IT. They've got a good base salary. They've had commissions for a couple of years, and they've got a taxable income of $200,000-300,000. That kind of loan goes through quite easily. If they're in a space that's unaffected by COVID, then applications fly through the system. Okay. Also for real estate agents. Yeah.
So, what was I going to say? You mentioned affected by COVID. So, are banks looking pretty closely at people in hospitality industry, things like that? Travel.
Yeah, travel. If you're a travel agent, I don't think you could possibly get a loan even if you tried. If you're in hospitality, it would also be extremely tough. Is your business pivoting to more of an online perspective? What does your BAS look like versus your license returns? Self-employed people in those spaces, very difficult. Was your taxable income affected? Did you take a pay cut to make it through the 6 months of COVID? What does your last pay slip look like on June 30 as well? So,
Mark, before we wrap up, a couple of comments from our users. Give me the money. Seems like Westpac has already adjusted loan servicing. That's from Luke Moroney. Let me use the equity I'm waiting to borrow from Luke Moroney. And banks go on an early holiday party time. Yeah, they do. They leave. Sounds like servicing doubles. Sounds like half the people are going away. Do the banks want the rich to get richer? Yeah, great one. That's good, Mark.
ANZ is slow. Is ANZ one of the slow ones?
ANZ very slow. Westpac terrible. But yeah, so some banks at the moment are extremely slow.
Now
you need to be very patient if you'd like to do business with that kind of a bank.
Now, second tier lenders, I think a lot of people may hear of them, don't know if they're good, bad, stay away from them. If you don't pay, they come on your door with a baseball bat. Can you run us through what a second tier lender is for the audience?
Second tier lender is anything outside the big four: ING, Bank West, Macquarie Bank, Me Bank. The list goes on and on. Very popular second tier banks.
So they're still very reputable and well known.
They all have banking licenses. You've got mortgage managers, they're all funded by big banks as well. They've got international bonds. There is no difference between a top four and a second tier bank. No difference whatsoever.
Okay, that's a good tip. All right, anything else you want to get out there, the audience, Mark, that you come across every day? That's a good tip.
It's a matter of make sure your paperwork's up to date. Bank statements are the hardest things to get from banks. Transaction listings need to be up to date. waiting for paperwork delays and application, and we're coming into the silly season at the moment where the service times blow out. So if you do need a loan and you want to get organised, make sure everything's up to date, pay slips are as recent as possible, any credit card limits get lowered or cancelled ASAP, just to meet
credit card back on. Don't miss your credit card payment.
No late payments on loans. Banks can't stand that.
No gambling.
Yeah.
But there's a good. So if you got $10,000 credit card, let's say it's not used, what's the number? Because I remember when you told me this, a $10,000 credit card will basically take $20,000 off the loan they will give you, or something like that.
Banks use 46% to service the credit card, so 3.8% a month. You've got a $10,000 credit card, $380 a month as an expense, irrespective of how much is in the card.
Yeah.
Oh my God! So, credit cards are bad for loan servicing. Get rid of them.
Yep, get rid of them. Reduce them down.
Unbelievable. What animals?
Yeah.
They're an animal, those credit cards.
Horrible.
All righty. Anything else you want to add on to this? This has been really good, informative. Any questions, audience out there? Luke, Lisa?
Luke, thanks for your questions. Lisa, Mickey Persky, she's a beautiful lady, that big Mickey Persky.
Yeah.
And anything else? Amal, g'day. Amal's
G'day.
Amal's husband's a broker.
Yeah.
Oh, lovely. Okay.
Conway, are you seeing more loans being done? Are you busier now or quieter? Like, what generally in the world?
I'm busier than I've ever been at the moment. But we're a bit selective of who we work with just to make sure they keep a good, strong customer base, and everyone's going to be organised with paperwork. So if you'd like to reach out and you're organised, love to have a chat.
If you're not organised,
life's too
don't waste
short.
my time.
Yeah. That's imperative. It's like you're happy to have the conversation, do a lot of work, free of charge for clients, but just get your shit together. That's all you ask.
Yeah, exactly. Get yourself.
And we do use Mark for loans. We do recommend for Mark for loans, and he's an amazing champion. Very good drinking scotch as well.
Thanks for having me on the show, guys.
Thanks for coming on.
Thanks, Mark.
You're welcome.
Thank you.
Take care.
Bye-bye.
Cheers.